My name is Tanner Litchfield. I am an investor and an agent based here in Utah. Today, I'm going to be talking about how I run numbers on a seller finance deal. Whether you are a wholesaler, whether you're looking for yourself, whether you're looking for your dad, whatever it may be, I hope this video is helpful. I'm going to dive right into the numbers to show what I do to determine if something is a deal. Okay, and to start off, so number one, if you are selling a deal here in Utah and appreciating areas, you can sell a deal that's a true break even. I've talked about this in previous videos, but a true break even means that it covers all the expenses: property tax, insurance, vacancy, maintenance, capital expenditures, property management if it's far away. You need to incur all these expenses to make sure it takes care of itself. In appreciating markets, you can wholesale deals that truly break even. Now, for my personal portfolio, I have a minimum requirement of 7% on my cash on cash return. Now, another one of my requirements, if you watch my videos, you would know this. I am solely after true seller finance deals. I am not interested in the sub 2 world. I lost 180 grand. So my risk tolerance, I stick directly with seller finance where they cannot call the note due and there's a lot more flexibility. So I'm going to dive into the numbers. With that being said, I use a very simple calculator that I created myself. This is napkin math, and then I do further digging afterwards. But this is an example of a deal that I'm currently doing. This is a 3-unit in South Salt Lake. And so you can see here, I plug in the income. And keep in mind, right now, this is just rents. If you are renting out a carport, if you're renting out a shed, whatever it might be, then you can include those in here as well. And then I have all my expenses in here. I got my vacancy, my insurance, property tax, maintenance, sewer, HOA, mortgage. HOA, not included in this deal. Sewer, the tenants are paying for all utilities. And so when I say sewer, you know what? I'm just going to change this right now to utilities. But the tenants are paying all utilities. Maintenance for me in this calculator is simplified, but it is capital expenditures and maintenance combined. CapEx is an important one to note. If a roof goes bad, if a furnace goes bad, water heater, you need to start planning on those fixes because those things don't last forever. So for maintenance, I have a bare minimum of 12%, and that's if the property is in great condition. And that's CapEx and maintenance combined. I've owned several, I'm up to 13 units right now, and this number fits based on my portfolio. So if it's in good condition, if it's been recently rehabbed, you can use 12% for maintenance. If it's older, outdated, if it might need fixes sooner than later, then you can go more towards the 15%. Property tax, you can find that in county records. Insurance, get an estimate. And then vacancy, in solid neighborhoods and areas, I'll throw in 3%. My max in the areas that I invest in here in Utah is 5% because it's a strong rental market. Now, in my cash flow market in Washington of Moses Lake, I throw in 8 to 10% for vacancies. So those are important things to note. Make sure that all your expenses are incurred so that you can understand what your true return is. So in this circumstance, I'm putting $100,000 down and my rehab will be 30 grand-ish, which you can see from this breakdown down here. The seller is paying for the roof and gutters, exterior paint, and the AC unit. So this is going to be my out-of-pocket, very cosmetic, mostly just carpet and paint. So my all-in cost is going to be 130 grand, cash flow about 713, and my cash on cash right now is 6.58. Now, I was very conservative on rents. I truly think it'll be more like 4150 on my rents. And so this deal hits my box at a 7.36. And you can see down here, I've talked about the terms that I got, 4.5% interest. And this is directly with a seller. So now that we've talked about that, this is for my own personal portfolio. And if you find a deal where the rents cover all of these expenses right here, I'm confident that you can sell that deal to an investor. Why is that? Well, because in an appreciating market, you're not investing entirely for cash flow. If Utah grows at an 8%, let's say even 4% conservative, the deal will make sense. Time will be on its side. Owning real estate in Utah, where it's growing at an insane rate, is a good investment. So find deals with seller financing where you can negotiate the rate. The more cash flow, the better, obviously, but you don't need to find a killer deal to sell it as a wholesale deal. That's my quick napkin math on running numbers on a seller finance deal. Hopefully that makes sense. The biggest thing here is making sure you have all your expenses in there. Make sure you subscribe. I'm going to be throwing a lot more content out here on YouTube, talking about my journey investing, being an agent here in Utah. Make sure you subscribe.